Bitcoin just broke below $60,000. The Federal Reserve turned hawkish for the first time this cycle, and the crypto fear and greed index has collapsed to 18, deep into what the market calls extreme fear. Every screen is red. Every headline is saying the same thing. Crypto is bleeding, and XRP is sitting right on top of $1, the single line it cannot afford to lose. But here is what almost everyone staring at these red candles is getting wrong. The thing dragging XRP down right now has almost nothing to do with XRP. And once you understand what is really happening behind this sell-off, the picture changes completely. Because the real question this week is not, why is XRP falling? The real question is this: is this the start of something worse? Or is this the setup that comes right before the turn? That is what we are going to answer today, calmly, with the data. No panic, no hype, just the structure underneath the noise. Quick note before we go further. Nothing in this video is financial advice. This is one read of the data, based on the public record and how this market actually behaves. What you do with it is your decision, your timeline, and a conversation with a professional who knows your situation. This channel gives you the calm read. The rest is yours. So here is the plan. First, what the Fed actually did on June 17th, because it was not what most people think. Then, why Bitcoin breaking 60,000 pulled XRP down with it. Then, the exact levels XRP needs to hold right now. And finally, the one signal underneath all of this that the headlines are completely ignoring. Let's get into it. This is the XRP verified. Start with the Fed, because this is where the pressure begins. On June 17th, the Federal Reserve held interest rates steady in the range of 3.5% to 3.75%. The vote was unanimous, 12-0, no hike. On the surface, that sounds calm, but the market did not react to what the Fed did. It reacted to what the Fed said it might do next. Because alongside that decision, the Fed released its updated projections, and those projections turned hawkish. The median forecast for rates this year moved up to 3.8% from 3.4% just 3 months earlier. 9 of the 18 officials now expect a rate hike before the end of the year. 6 of them expect 2, and 17 of the 18 said the risks to inflation are tilted to the upside. Inflation itself was revised higher to 3.6%. Let me translate all of that into plain English. The Fed did not raise rates, but it told the market, do not assume cuts are coming. In fact, get ready for the possibility of a hike. Markets are now pricing in a 25 basis point increase by October. That is the shift. Not a rate move, a change in expectations. And in this market, expectations are everything. Here is why that matters for XRP. When the Fed signals higher rates for longer, money gets more expensive. And when money gets more expensive, investors pull back from the riskiest assets first. Crypto sits at the very top of that risk ladder, and you can see it on the chart. Bitcoin broke below $60,000 this week, its lowest level since late 2024. That is roughly a 50% drop from its peak of around $126,000 last October. Ethereum is sitting near $1,550, also at its lowest of the year. The fear and greed index is at 18, extreme fear. Now connect this back to XRP. When Bitcoin falls this hard, it does not fall alone. It drags the entire market down with it, and XRP is no exception. XRP is what traders call a high beta asset. That is a simple idea. It means when the market drops, XRP tends to drop harder. And when the market turns back up, XRP tends to move harder in that direction too. So XRP at $1.05, down about 8% on the week and 19% on the month, is not telling you something is broken with XRP. It is telling you the entire risk market is under pressure, and XRP is feeling it more than most. That distinction matters. Hold on to it, because it is the key to everything that comes next. If you are watching XRP closely this week, comment macro below. I want to see how many of you are tracking the bigger picture and not just the candles. So let's talk about the levels, because this is where it gets important. Right now, the line that matters most is $1. It is a round number, and round numbers carry weight in this market, because that is where buyers and sellers draw their lines in the sand. As long as XRP holds above it, the range stays intact. Below that, the next real support is 96 cents. The data suggests a daily close under 96 cents would break the current structure, and some analysts point to 80 cents as the level below that. On the way up, the first sign that the bleeding has stopped is a move back above $1.08. After that, $1.12 is the level that would flip the short-term trend back to the bulls. And above all of that sits the heavier zone, around 127 to 130. But here is something most people are not watching, and it is important. XRP's futures open interest is sitting around $2.37 billion right now. That is more than 1.5 times all the money that has flowed into US XRP ETFs combined. What does that tell you? It tells you the short-term price is being driven by traders and leverage, not by long-term investors. And that is why a break below $1 could move fast, because when leveraged positions get forced to close, they accelerate the move. So this is the level to watch. $1 holds, the range holds. $1 breaks on heavy volume, and the move down could be sharp and quick. Now here is the part the headlines are completely missing. This is the signal underneath the noise. While the price has been bleeding all month, something else has been happening quietly in the background, and it is the opposite of what you would expect. US XRP ETFs just posted their 8th straight week of inflows. 8 weeks. Money coming in, week after week, even as the chart went down. In the week to June 26th alone, those funds pulled in almost $23 million with 0 outflow days. On the very same days, Bitcoin ETFs were bleeding hundreds of millions. And it is not just the ETFs. On-chain data shows the largest wallets, the ones holding more than 1 million XRP, now control about 74% of the entire supply. Over the last 6 months, those wallets added more than 1.5 billion XRP. At the same time, the amount of XRP sitting on exchanges has fallen to multi-year lows. Let me put that together for you. The biggest holders are buying into the weakness, and they are pulling those coins off exchanges. That is not the behavior of people who are scared. That is accumulation. So here is the honest, two-sided picture. The bearish case is simple. The macro is ugly. The Fed is hawkish. Bitcoin is under 60,000. And until that pressure lifts, XRP can keep grinding lower, and that $1 level is at real risk. The bullish case is just as real. The same high beta that is dragging XRP down today is exactly what makes it move hard when sentiment turns. And while retail is fearful, institutions and large holders are quietly accumulating. When the macro pressure finally releases, the supply that is left on exchanges is thinner, and that can matter a great deal. This does not guarantee anything. Both of these things are true at the same time, but notice which one the headlines are ignoring. So what do you actually watch from here? 3 things. First, Bitcoin. XRP is not going to turn decisively while Bitcoin is breaking down. The first signal is Bitcoin reclaiming and holding above 60,000. Until that happens, assume the pressure stays on. Second, the Fear and Greed Index. At 18, we are in extreme fear. And extreme fear is often where the market is closest to a turn, not the start of one. Watch for that number to start climbing. Third, the Fed and the calendar. The market is pricing a possible hike by October. Any sign the Fed is softening that stance would take pressure off every risk asset at once. And XRP, as a high beta name, would be one of the first to feel it. Keep those 3 on your screen. They will tell you when the macro tide is actually turning. So let's bring it all together. XRP is not falling because something broke. It is falling because the entire risk market is under pressure from a hawkish Fed and a Bitcoin breakdown. And XRP feels that pressure more than most. The price is sitting on $1, and that level, along with 96 cents below it, is what defines the range right now. But underneath that red chart, the story is not fear, it is accumulation. 8 weeks of ETF inflows, whales adding more than 1.5 billion XRP, exchange supply drying up. The headlines see the candles. The data sees something quieter and very different. The macro reset is real, but a reset is not an ending. It is the part of the cycle that comes before the next move, and the people who understand the structure right now are the ones who will not panic when everyone else does. If this is the kind of breakdown that helps you stay calm and think clearly when the headlines are loudest, subscribe and turn on the bell so you don't miss the next one. No hype, no panic, just the structure, every single video. And if you want my full breakdown of where XRP goes if that $1 level breaks, watch the video on screen next. This is the XRP Verified. Stay patient, stay rational, and as always, we don't wait for the future, we plan for it.